this carefully because this price behavior aligns closely with the structural characteristics of a cup and handle. If you're new to this, your cup and handle formation is really, that's the bullish dream, right? And it's one of the most really reliable bullish continuation patterns in any technical analysis when you're looking at these charts. Welcome to the live stream, everybody. I'm going to break down the last 6 hours in the silver market because cracks are starting to form that most people are not seeing. Let's get straight into this. Over the past 24 hours, silver has demonstrated precisely the type of behavior that historically precedes accelerated continuation rather than exhaustion. This is really key, and pay very close attention to this because most people are looking in the wrong direction. The metal has been trading firmly above key technical thresholds. I'm going to explain this in plain English so you really understand what's happening and you could see where the spot price of silver is headed. It's trading firmly above these key technical thresholds, and it's also maintaining structural support near its rising 50-day moving average. This part is really critical to understand because this is reinforcing the underlying strength of this trend. And this behavior really, it's not random noise. It is evidence of a market transition from consolidation, away from consolidation, into expansion. And that's what tells us over the next 24 hours, easily by next week, we're headed to $100 silver again. When silver maintains upward structure like this, by the way, I post a new live stream every day, 9 p.m. daily, breaking down the silver market of that day. Every day, 9 p.m. Eastern. Don't miss these live streams. Be ahead of the curve. You'll know when that spot price is moving. So when silver maintains this upward structure above its medium-term trend, what happens is it confirms persistent demand capable of driving absolutely rapid repricing. And that's what we want. Just look at the recent price ranges. And I'm looking at the past 18 hours now for this metal. We were between $81 to touching $85 an ounce. And what that did is it illustrated ongoing accumulation rather than disruption. And it reflected capital inflows, meaning money being put in and supporting these elevated price levels. To understand why this matters, we have to examine the role of the 50-day moving average. And I know most people stacking silver, they just want to know what the spot price, they want to get to their buy price or get to their sell price. But things like this, the 50-day moving average, this is what most people are not looking at. And this is where things get really important. So lean in and really follow this. This is one of the most critical technical indicators in momentum markets. And that's where we're at. We are in a momentum market. Silver's consistently held above this rising 50-day exponential moving average, and it's confirming the continuation of the medium-term uptrend. Because when price remains above a rising moving average, it signals that buyers are continuing to absorb supply faster than sellers. That's really important. And the slope of the average itself really gives us key insight into the directional pressure of this metal. Not pressure down presently, we're looking at pressure up, which is what we want. We're looking at momentum. And a rising 50-day, when we see that, it reflects persistent accumulation. And really, while a flat or declining average could signal stagnation, what we're seeing in the past 50 days is that silver's sustained position in this average is above its dynamic support. And that confirms the structural bullish momentum. That's what we want. We want bullish momentum, baby. We want to break $100 an ounce, head back to 117, head back to 120 an ounce. That's what we're looking for. If you're new to this live stream, I post a daily live stream every day, 9 p.m. Eastern. Don't miss it, 9 p.m. Eastern. I break down the day's movement in silver and help you understand where the price of this metal is going. Stay to the end of this video because I'm going to make this all make sense to you and help you understand what we're looking at. For example, let's go into the candlestick behavior because silver stackers, we look at the spot price, but we tend to not really fully understand how to break down these charts. And I'm going to explain this to you. Now, don't miss what this means because candlestick behavior of the past 24 hours provides even more compelling confirmation. Recent daily candles exhibit higher lows and sustained closes that are above the prior support zones. Now, I'm going to explain this in plain English so you really see where silver's headed. What this does is it tells us that we have continued absorption of this selling pressure. It's like soaking it in. And this pattern of higher lows shows us that institutional accumulation, meaning large players, industry, that kind of accumulation, that has large capital entering positions. And they're putting money in incrementally rather than just an aggressive, we're going to chase one price and we're going to dump money into silver, push it up to a price. That's not what's happening. It's incremental. And when we have institutional accumulation in this way, it produces really exactly the type of structure that we want as silver stackers. We want a gradual upward pressure, and we want to punctuate it by consolidation periods that really serve as a launching platform. If there's any phrase that you're looking for in silver stacking, it's that, a launching platform, because we want to move, we want further expansion, we want this price to blow past $95 an ounce, head to $100 an ounce again. And what these charts are showing us is by next week, all this momentum is set to continue because that's what the pattern of silver is showing us. Now, watch this carefully because this price behavior aligns closely with the structural characteristics of a cup and handle. If you're new to this, your cup and handle formation is really, that's the bullish dream, right? And it's one of the most really reliable bullish continuation patterns in any technical analysis when you're looking at these charts. If you're new to this live stream, drop a comment down below. Let me know what time you're watching it. Let me know where you're watching it from. I love meeting all you new stackers. I post a live stream every day, 9 p.m. I drop this live stream and I'm breaking down the day's market for silver and telling you how you know where this spot price is headed so you're not just guessing. So we have this cup and handle formation, and what happens is that occurs when price consolidates really after a strong rally and it forms a rounded base. And you can see these rounded bases in the charts. When we see that, what it tells us is that silver, sometimes, yes, it experiences a brief pullback. During that pullback, you'll hear people shouting from the rooftops saying, silver's dead, forget it, cash out, why waste your time? Let them shout that, because when you follow charts correctly and you see that that brief pullback is, the key word there is brief, it's pulling back before it's breaking out to new highs. It's kind of, the way I think of this is a slingshot, it's just being pulled back. And if you don't know what you're looking at, you don't understand that it's pulled back because it's tight and you're going to let go of it and we're going to fly. So that's the cup and handle really kind of shows you that in a visual form. I want you to see this clearly because it's so important to understand where silver's headed. Silver's price behavior over recent sessions strongly resembles this formation. This is exactly what we want. The rounded consolidation phase reflects absorption of the supply, while recent higher lows indicate strengthening in demand. And I'm going to stay with me because I'm going to explain this in plain English so you really get this and see where silver's headed. This cup and handle formation occurs when markets pause temporarily. That's the best way to really understand it. It pauses temporarily because it's absorbing the profit taking that's happening before resuming upward momentum. Now, when we say profit taking, we're just talking about people either A, cashing out their holdings because they feel like this is their sell price. For example, We were recently at $85 an ounce for silver. That could be some traders, some institutional buyers. That's their sell price. They're waiting for $85. They get to it. They cash out, right? That's their profit taking. Or as silver stackers, you might have your sell price. When silver gets to a certain point, I'm not cashing out all of my silver, but I'm cashing out a certain amount. So we do it on both ends. We do it on the retail end, the silver stacker end, and institutional buyers, institutional players, they do the same thing, that profit taking. But what happens is, just because profit taking impacts the price of silver, we will see a dip in the chart. And that's your slingshot being pulled back, because the demand for the metal is still there. This is key. And this is the turning point that we really need to understand. When we see this cup and handle and we see that dip, that doesn't mean that people are disinterested in silver. It doesn't mean that people are cashing out because they feel like silver's dead, they don't want it anymore. No. It means that people have met their mark, they're taking their profit, but the industrial demand, and really, watch this carefully, because industrial demand is what has gotten this price to where it is today. It's not you and I, silver stackers, buying this metal. It's industry that they just need it. This is the new era for silver. It's completely new. 10 years ago, 15 years ago, we were not at this point. The demand for solar, the demand for EVs, the demand for AI, that is sucking up all the silver on this planet. And those industries, they can't even look at price at this point. They can't. They need the metal. They're just buying it, whatever they can get, because they need it. Look at what's going on in China. They need it. Look at that premium, and we'll get to the premium in a minute. That premium that we're seeing in China, a $10 premium the past week. So even though we see a dip, it's getting ready to push up higher. And that moving average crossover behavior, it provides an additional confirmation. So not just this cup and handle, but we have the moving average showing us. Medium and long-term moving averages, they remain aligned with any bullish formation. And shorter averages positioned above longer averages also. So this alignment reflects structural trend in strength. And when I say structural, I mean these institutional players that need this metal no matter what. That's the structural strength that we have in silver that just gives us the greatest foundation for this product. What other product on this planet, besides precious metals, can you point to in which industry just needs it so badly that it doesn't matter how much the price bumps up, they're going to keep buying it? It's just, that's why we're in such a bullish sentiment for this metal. So when shorter moving averages remain above longer ones, that indicates that recent price action is stronger than historical price action. It means that this pattern is, in its own way, changing, and it's territory we haven't been in before. But really, the good news is, although it's changing, it's confirming ongoing momentum. Silver's moving average structure really sticks with this bullish sentiment because it shows that we have resistance analysis with the bullish outlook. And again, I'm going to explain this in clear English so you really understand what's going on with this metal. I believe by next week, we're going to be reaching for $100 silver again. And that's my argument in this live stream. I'm going to break this down. I post this live stream. If you're new, I post this live stream daily, every day, 9 p.m. Eastern. Don't miss it. I break down the day's happenings in silver and help you understand really how we're in such an exciting moment for silver, and help you figure out and determine where the spot price is headed. So let's get back to resistance. The resistance analysis, it further reinforces this idea, this bullish outlook that I'm arguing. And what we've seen in just the past 24 hours, let alone, I'll get to the last 6 hours in a minute, but the past 24 hours, silver has approached major resistance levels. We're looking between $90 and $95 an ounce. So exciting. It's such an exciting time for silver. This shows us that we're hitting a psychological threshold. And psychological resistance levels are not purely technical. They represent zones where market participants reassess valuation. And when price approaches such levels like this with strong structural support, again, industry, industrial need supporting this, breakout probability just increases exponentially, significantly. This is what we want. Now, this is the structural shift that we're experiencing with silver. Really keep this top of mind. This is a structural shift. That's why I'm calling this the new era for silver. We have a technical analysis that identifies this zone as critical resistance, but we have the sustained momentum that increases the likelihood of breaking through that rather than being rejected. Because 15 years ago, as I said at the top of this video, 20 years ago, silver was not based on such an amount of industrial demand as we have today. We've never seen the industrial demand that we have today. Look, we're headed into the 6th year running of a shortage in silver, meaning the demand for silver from industry, we just can't meet it. There's not enough supply. And silver does not, you can't just turn on the tap. You can't open up a silver mine, throw money into it, and dig up more silver. That's not how silver is taken from the ground. It's actually taken as a byproduct of copper, a byproduct of other metals that mines are pulling from the ground, and silver comes up as a byproduct. It's really difficult to get more silver. It's so difficult that that's why we're headed for our 6th year of a deficit in this metal. Now, this really reveals what's happening. So listen closely to this, because this is going to really help you understand where the silver price is headed. When we look at these momentum indicators and we see continuation rather than exhaustion, silver's demonstrated rapid recovery, listen to this number, from prior corrections, including rebounds that exceeded 22%. Right? This was following volatility events. It still exceeded 22%. And when we see recoveries like this, that confirms the persistence of demand. It shows us that the price keeps recovering and keeps going up because the demand is still there. The greatest example of this is how China is dealing with silver. The Chinese government is literally choosing which refineries are able to be open, which refineries are able to refine their metal. The government is choosing that. We don't know that here in the States. Here in the States, we're letting the market decide that. And we're already, look at the past 6 months, dealing with refineries of silver, just turning away junk silver. You heard that correctly. If anybody tried to sell their junk silver in the past 6 months, you're nodding your head up and down. By the way, if you're new to this live stream, every day I'm posting this live stream, 9 p.m. every day. I'm breaking down the silver market, helping you understand what happens that day in the silver market so you understand the spot price and where it's headed. Don't miss the live stream here on Pound of Gold every day. Please leave me a comment down below. Let me know where you're listening from, what time you're listening to this, so I get a good idea of when to post this. I chose 9 p.m. I think that's a good time slot, but if more people are listening at an earlier time slot, I might change it. Okay, let's get to this trend analysis that we're looking at, because it really reinforces my argument about silver breaking to $100 an ounce, headed to $120 again. Silver remains within an ascending channel, which is really exciting. And as I mentioned at the top of this video, we're seeing this with higher highs and higher lows. I use the example of a slingshot, because when we hit those lows, it's just a slingshot being pulled back. The tension is there. The demand for this metal is still there, and it's not going to continue to keep going lower. It's just being pulled back because of profit taking, and it's going to shoot higher. Ascending channels represent persistent upward pressure for silver. And within these channels, these pullbacks typically represent just temporary consolidation. That's what we're seeing. So when we see it in the chart, it shows that we're not just wishful thinking about this metal. Sure, 2 years ago, there was a lot of wishful thinking because the psychological level of silver, that ceiling, was so difficult to break through. Presently, we have this is so exciting to say. Presently, we have a psychological level, a ceiling of $90. Would you ever think 2 years ago, those of you who were stacking silver 2 years ago, that would be our psychological ceiling? Would you ever think that? No, you wouldn't. Because our psychological ceiling then was $40. $50 wasn't even in our reality back then. It's only 2 years. And now we're looking at a psychological ceiling of $90. So when we have that as our level of function, it's an inflection point because it attracts attention from everyone, from not just industrial buyers, but silver stackers. Everyone's looking at this. And when the price approaches levels like that with strong momentum, the breakout probability increases. The best example of this is looking at what's happened since we broke the $50 level. We broke $50. We're not turning back to $50. And a lot of that is the psychology of the momentum of the silver price. Now, let's get into what actually happened over the past 6 hours, because the silver market went into a high revealing repricing process. This is so important to really pull in front of our faces, because if you're wondering where silver is going over the next 24 hours, over the next 72 hours, next week, this is the most telling part. This is where the signal truly becomes clear. And it's a signal that illustrates this metal's continued vulnerability to macroeconomic crosscurrents. Its vulnerability to speculative positioning shifts. Its vulnerability to the structural fragility that's really inherent in commodity markets. Because as of this afternoon, just 3-4 hours ago, COMEX silver futures had traded within a volatile intraday range, and it was roughly between mid $86 to high 90, or almost at $91 an ounce. Now, again, this is the signal that we really need to look at, because when we have a market that's so small like this, and it's ultimately gravitating toward the lower end of the spectrum, this 6-hour window that we just experienced represents not merely routine price fluctuation, but really it's a microcosm of the broader post-parabolic adjustment phase that currently is dominating silver's trajectory. And when I say dominating, I mean we're just coming back from a historic peak of $120. So you may feel like the term parabolic is hyperbolic, but it's not. And this was just a few short weeks ago. If you're new to this live stream, I post a daily live stream every day, 9 p.m. Eastern time, breaking down the day's silver market, telling you how you need to look at this to understand where this price of silver is headed. So every day, tune in, Pound of Gold, 9 p.m. Eastern time. To understand the implications of today's movement, look, it's necessary to contextualize the current position of silver within the framework of a mean and reversion, of speculative liquidation, of the macro-driven liquidity dynamics that we're seeing. I'm going to break this down in clear English so you really can take this information, put it in your pocket, and understand how to use this information to put cash in your pocket along with it, right? That's the goal here. Now, as of closing today, silver has already declined sharply from recent highs, but it's trading near approximately $87 an ounce, down over 4% from the previous day close. And that was coming down from $91. We were very excited about that. This decline represents not really an isolated intraday event, but really it's part of a broader structural correction in which silver's fallen nearly 19%. Really keep that number top of mind. 19%. That's how much it's fallen over the past month, following, again, the explosive, the rally that brought us to $120 an ounce. 19% drop. The immediate driver of the intraday reversal that we've seen between morning and afternoon of today's trading hours, which really rose to approximately 97 during the session, because silver's priced globally in dollars. We have to keep that clear. It's priced globally. It's not just a U.S. price. It's priced globally in dollars. And a strengthening dollar just mechanically, it's going to increase the metal's cost for non-US buyers. The strength of the dollar is directly tied to silver, just from that end. Now, when we're reducing marginal demand and forcing futures traders to reassess positioning, this inverse relationship between the dollar and silver, it remains absolutely one of the most powerful short-term drivers of price action, particularly during periods of elevated speculative leverage, which is what we're experiencing this week. And from a liquidity perspective, the timing of the reversal really suggests that that early morning rally, which really it was likely driven by just residual overnight positioning, driven by Asian, European sessions, flows from that session, that rally encountered significant institutional resistance. Because when you could see that New York trading volume intensified, that's the big tell. Now, here's where the market really shows its hand. Lean into this and check this out. This is exactly where the market is showing its hand, because early in the day, silver had extended gains toward the $90 level amid ongoing safe haven demand linked to clearly geopolitical tensions, Middle East, all that uncertainty, linked to policy uncertainty, tariffs. However, and there's a big however, this upside momentum proved just unsustainable once the dollar strength and the profit-taking pressure began to dominate. If you're new to this podcast, if you're new to this live stream, let me know down in the comments. Let me know where you're from. Let me know what time you're listening and watching. If a lot of people are listening at a different time, I might switch the time, but I really like 9 p.m. Eastern. This is my daily live stream on Pound of Gold. I'm breaking down the day's market for silver and telling you what you need to know, how you can get a grip on understanding where the spot price of silver is headed. So let me know in the comments where you're listening from and what time you're listening. Now, the concept of profit taking is really critical, particularly on a day like we just experienced today. But it must be understood correctly, because profit taking is not merely silver stackers locking in gains, right? It's not just silver stackers saying, hey, silver hits $90 an ounce, I'm cashing out 3 tubes, which we do. Absolutely, that's smart. I'm not fighting on that. That's not my argument. My argument in this live stream is that what we're seeing, the fundamentals that we're seeing, and the action we're seeing in the silver market today is telling us that by next week, we're breaking $100 an ounce. That's my argument. So yes, profit taking is not merely silver stackers locking gains, but rather what it reflects is institutional balance sheet management. That's what we're seeing, particularly among hedge funds and commodity traders, all these CTAs that accumulated large long positions during silver's recent ascent. The price was going up. They went in. I'm talking about big money. I'm talking about hedge funds, commodity traders, big money. They went in. They talk about a fear of missing out crowd. Those are big players putting large amounts in. And as soon as silver approached that $90 threshold, that's the psychological threshold. That is, at the top of this live stream, I talked about this. This is psychologically significant. Just like $50 was psychologically significant. 90 also. Certain numbers that we see historically with metals, it just becomes that, psychologically significant. People want to cash out at that point. They want to lock in their gains. And of course, we have institutional players. So you and I, we sell 3 tubes of silver to our local coin shop. That's not going to change the price of silver. But when we have these CTAs and these hedge funds, like really looking at their balance sheets and managing their balance sheets by profit taking, we're going to see a change. We're going to see a dip in spot price clearly, because these participants, they begin to systematically reduce their exposure. That's how strong it is. I mean, it's truly systematic. Now, this is the inflection point that we really have to understand. So really take your time and listen to this, because I'm going to explain this in clear English, how this impacts the spot price of silver. When we're compounding this pressure with this persistent elevation of real interest rates, right? While nominal treasury yields is eased slightly, it was eased to approximately 4%, right? 4.03% during the session. They remain high enough to continue exerting structural pressure on non-yielding assets like silver. And this is the dynamic that it's really fundamental, because yes, you could look at it and you could see that silver generates no cash flow, obviously. So it's non-yielding asset that's generating no cash flow. And you can see that its valuation is therefore highly sensitive to the opportunity costs of holding it relative to interest-bearing assets. Money goes where it's treated best. And we cannot forget that as silver stackers, that money is going to be taken away from the non-yielding asset, and it's going to be put in to where it's being treated best. And when interest rates are going up, your cash is going to be treated better over there with treasuries rather than the safe haven of silver. And within the 6-hour window, what the market exhibited was clear signs of entering a consolidation phase that really was following what analysts have been describing as hyperbolic, and really a hyperbolic advance. And that sounds alarmist. It does. But here's what those advances tell us. If you're new to this live stream, let me know. Tell me in the comments where you're listening from, what time you're listening to it. I post this live stream every day at 9 p.m. Eastern Time. Every day, this is my daily live stream where I break down the market and I tell you in plain English so you can understand how this silver market is moving, and you could really use these strategies to see where the price of silver is headed and understand how the spot price is going to work for you. So hyperbolic advance is this term that we've heard. We hear talking heads stating that phrase, hyperbolic advance. And really what it's telling us is that these advances that we witness today, they're inherently unstable because they're fueled by, really disproportionately, by leveraged capital rather than organic physical investment. And here's the difference in that. I told you I'm going to explain this in plain English. It's not just investors putting in money and into silver and trying to make money off silver. It's not. It's an institutional drive, and it's industry that needs this metal for their business. That's what's really moving this price up. It's not people trying to get an ROI. It's not. ROI is not in this picture. And it's clear to see that because no matter how high silver is going, these industries that require silver, solar, EV, AI, all this tech that needs silver, they haven't gone anywhere. That demand is still there. So yes, we're going to continue. If we hear analysts using phrases like hyperbolic advance, we're going to hear that a lot because the demand is still there. It's not going anywhere. And that's good news for you and I as silver stackers, that demand is bringing this value as high as it can. Sure, bad news if you're trying to buy right now because it's a strain on your wallet. But this dynamic is really amplified by the structure of COMEX silver futures themselves. And when we see that, yes, each standard contract represents 5,000 troy ounces of silver, that has not changed. But that means that the dollar price movement corresponds to a $5,000 change in contract. So silver moves $1, that's a $5,000 change. And that's painful. You and I were nowhere near that type of money, that type of investment. We're not even near that. We're dealing with spot price for 1 ounce, not 5,000 troy ounces. But this embedded leverage, it really magnifies, and it's both upward and downward price movements. So it transforms relatively modest shifts in investor sentiment into really significant market repricing events. I've spoken to dealers. I mentioned that just a moment ago that you and I are not involved in COMEX. But I've spoken to dealers at local coin shows where I live who are involved in COMEX. 2 or 3 dealers get together. They put money into silver futures via COMEX. And yes, they bite their nails when the spot price is moving because you're dealing with that kind of money, a $5,000 change in contract value. That is a big change. So here's what exposes the real risk. This is what we're seeing. And most importantly, today's movement, it doesn't indicate a structural breakdown, no. It doesn't indicate a breakdown in silver's long-term bull thesis. Instead, really lean into this and listen closely because this is going to help you. Instead, it reflects what analysts characterize as a momentum reset. That's it. And we see this on the charts throughout today. Just momentum resets, positioning adjustments, rather than a fundamental collapse in demand. And this distinction is essential. When we have structural bear markets that are driven by declining physical demand or macroeconomic contraction, that's completely different. Whereas positioning-driven corrections are primarily a financial phenomenon, that's not what we're dealing with. We're dealing with institutional demand that is increasing. It's not going anywhere. And really, the biggest tell for this is when we look at the premiums happening in China over the past week. We're seeing $10 premiums in China. And that's showing that no matter what happens with the daily spot price, the industrial demand is still there. China needs silver more than anybody. They need it. They're trying to be the top of the game for solar, top of the game for EV, for everything. China needs that silver. So as long as the premiums in China are high, that's a big tell for us. If you're new to this live stream, let me know in the comments down below. I post a new daily live stream every day at 9 p.m. Eastern, 9 p.m. I'm breaking down the silver market and telling you in plain English how you could understand and see where the price of silver is going so you can look at that spot price and understand where it's headed. Every day I'm breaking this down 9 p.m. Eastern. Let me know in the comments if you're new. So the first continuation phase that we have is really characterized by residual upward momentum from last night, from overnight trading sessions. And this is common. The first phase reflects the delayed transmission of global macro sentiment and overnight positioning adjustments. This is really typical for silver. But second, and this is the hidden mechanism right here, is the rejection phase. And the rejection phase is in which the price attempts to breach higher levels, particularly 90, the psychological level, $90, and it's encountered by institutional selling pressure. That is really the hidden mechanism, and that's really the push and pull that we're all experiencing with silver this week, because we have that institutional demand pushing price up. We have the psychological level that is just always difficult to break. But third, on top of that, we also have the retracement phase. And that's marked, that tells us that we're having a retracement phase when we see systematic liquidation because dollar strength is intensified and speculative positions are starting to unwind. And this becomes clear on these charts because what we see is the classic structure of a failed breakout. And those failed breakouts are the charts that come up and touch the $90 ceiling, that psychological ceiling. It just touches it and just comes right back down. It's just a failed breakout. Now, at the top of this live stream, I talked to you about the cup and handle that we're seeing. That is not a cup and a handle that we see within 4 hours. That's not. That's a cup and a handle that we see really over 30 days. And the down